Alright guys, my name is Shervin, welcome to my channel. In this video, we're going to talk about the possibility of a market crash and what you should do to be prepared if the worst comes to worst. Now, over the past couple of weeks, the market has been incredibly turbulent due to the rising tensions from the Ukraine conflict. Now, ever since the invasion took place, a number of countries imposed economic sanctions against Russia, which prohibited any trade with a Russian company, and as a result, the market dropped significantly. Now, this is mostly due to the fact that sanctions against Russia significantly impacts the price of commodities like oil, which in turn can have a massive ripple effect into the performance of a lot of other companies and the Western economy as a whole. Now, in this video, we're going to talk about how you should be preparing for a potential market crash, what are some important things to do if a market crash does actually happen, and as well as that, what you should be doing with your investments as a whole in such uncertain times. And as always, before we get into it, I do have a favor to ask of you, and that is to smash the like button down below for the YouTube algorithm. It only takes you a second to do, but it helps me out a lot when it comes to other people on YouTube finding my videos, so if you could take the time and do it, I'd really appreciate it. Now, what usually happens during a market crash is that people see the value of their investments going down and they just panic. They feel that they're losing all the money that they had invested, and they fear that if they don't sell it right now, they're going to lose even more. Now, the reason why this line of thinking is actually incorrect is because you're not actually losing any money until the moment that you sell your assets. Now, for example, let's say you bought a stock at $100 before the market crash happened, and then after the market crash, that same stock is now only worth $70. Now, you might look at that and say you lost $30 from your investment, but really you haven't lost anything because you bought one stock and you still have one stock. Now, if you go out there and sell your stock right now, yes, you will have lost $30 on your investment because that stock is worth less right now than it was when you originally bought it. But that said, there's no obligation for you to sell that stock right now. In fact, if you hold on to it for a couple of years, the market will eventually recover and you will be able to sell it for a lot more than just $70. Now, in the same example, let's say you held on to that stock instead of panic selling it at $70, and then a couple of years later, once the market has actually recovered, that stock is worth $120. Now, as you can see, if you go out there and sell that stock then, you actually make $20 on your investment instead of losing $30 on your investment. And as crazy as that might sound, that actually happens all the time. Anytime there's a big market crash, there is eventually a recovery period as well. So this means that anytime there's a big market crash, do not panic sell your investments. They will eventually recover and you won't lose any money in the long term if you just hold on to your investments and don't sell them. Next up is to make sure you have an emergency fund in place, and if you can, bolster it as much as possible. Now, having an emergency fund in place is like having a safety net to protect you against all the possible implications of a market crash. Now, during these times, a lot of people might lose their jobs, their benefits, or any returns they have from their investments. Now, this means that there's always a possibility that you might need to rely on some of your savings in order to sustain yourself during these horrible times. Now, it is usually recommended that for your emergency fund, you hold about 6 months to a year worth of your expenses in cash in a savings account. Now, of course, given that these are uncertain times, if you could bolster that amount to just cover a year worth of your expenses, that would be even better. Now, it is also important that you pick the best savings account available to you with the best interest rates possible for your emergency fund, so that when your money is just sitting there in a bank account, you're still getting some interest on it as well. Now, here in Canada, the vast majority of banks do not offer anything above 0.1% when it comes to the interest rate of the savings accounts. In fact, the only bank account in Canada that has a higher interest rate than 0.1% is the EQ Bank savings account, which has an interest rate of 1.25%. Also, as well as that, this account has no minimum balance requirements, no interaction fees, and unlimited free e-transfers as well. So if you don't already have an EQ Bank savings account, I highly recommend you go out there and open one up today. And if you want to get some free money while you're doing it, you can use my referral link down below and get $20 for free just for using my link. Now, once you have your hands on the brand new account, make sure to start building your emergency fund and make sure to hold at least 6 months worth of your expenses in there just in case. Now, the next thing to do if you're someone who's investing for the long term is to make sure you keep investing as normal regardless of what's actually happening in the market. Again, during uncertain times, particularly when the market crashes, a lot of investors become hesitant to keep buying and investing into more stuff. But that is actually a mistake because during these times, everything is available at a discount price and you're able to invest into a lot more for a lot less. Again, if you're someone who is investing for the long term, you should know that the market always goes up in the long term. And no matter how much it goes up and down and sideways in the meantime, it will go up in the long term eventually. So just keep on buying regularly. Now, I should also mention that another mistake that a lot of people make is that they say, oh, I'm just going to wait for the market to crash all the way down and then I will buy at the very bottom point of the market. Now, of course, if you could actually do that, then yes, that would make sense. But the problem is there's no way to know which point is going to be the lowest point of the market. The truth of the matter is that no matter how good you think you are at guessing how the market is going to behave, it could go up or down at any moment for any number of reasons. So if the market starts dipping, but you're not quite investing yet because you're waiting for it to go even lower, well, there's actually no guarantee that it will end up going lower. And even if it does, how do you know if it's going to keep going lower or if it's going to stay there or turn around? There's just no way to know which point is going to be the bottom of the market. So for that reason, you're just much better off investing normally as you would every single month. So stop worrying about how much it went up or down or how much more you would have made if you had invested yesterday or how much more you would have made if you had invested the day after. It doesn't matter. Just invest and don't worry about it. Now, last but not least is to consider adding some diversity to your investments with other types of investments that will do better in a bear market. Now, a good example of this would be investing into bonds where you're still receiving a good amount of return even during a bear market. Now, this point right here is much more important later on in life as you get closer and closer to your eventual retirement. Now, this is because when you are retired, you do need a source of income from your investments. Now, of course, during a market crash, you don't want to sell your stocks because they are worth much less right now because of the market crash. So that means that you need another type of investment in your portfolio that still performs well even during a market crash. Now again, if you are on the younger side, this is by no means a priority right now, but it is good to keep in mind for later on in life. Alright, so that's about it for this video. Hopefully you guys enjoyed that. Now, if you haven't subscribed to my channel yet, make sure to smash the subscribe button down below and join the community. I make 3 new videos a week on personal finance and investing, and by subscribing to the channel, you get to see all my new videos right as they come out. Also, as always, if you have any questions about any of the stuff that we talked about today, make sure to let me know in the comment section down below. I always respond to every single question that comes in. Alright, so with all that said, thank you guys so much for watching, and as always, I'll see you in the next video. Cheers.